Good morning, good afternoon, and good evening, and welcome to the panel on the future of bank payments, the role of blockchain and cryptocurrencies, which is brought to you today by Vacuum Labs, where I reside in half of my life. We're very happy to welcome everyone today. I'm not here by myself, clearly, and we will get to who is with me on the panel today. We have a fantastic panel of people who are thick into the subject and experts in their areas. We're talking about payments and blockchain and crypto, obviously. So bank payments have been transforming rapidly, whether it's from real-time cross-border payments to the use of blockchain and cryptocurrencies. We're seeing the emergence of central bank digital currencies and stablecoins, making banks rethink their business models and making consumers wonder what it's all about. Am I actually going to a central bank for my banking as we go forward? Is it going to be something about Facebook and Libra, DM? What's happening in my life? We're beginning to see the emergence of an alternative economy that is everywhere. It's ubiquitous. It's connected all the time. Software that enables it, and we can transact in a truly borderless and frictionless way. Historically, when there's something new that emerges with money, then there's something that we can expect to see change in the mainstream, and we'll dig into that today. When crypto first emerged, we all thought that it was just going to take over cash, and this was the way forward. And of course, over the last year, we've seen a lot of difficulties with cash because of what's been happening with the pandemic. It's sort of drifted into a more speculative asset class and investment in trading. And potentially now we see the pendulum swinging back into our mainstream payments. And we'll be discussing this with our panel. So lots to get through in a relatively short period of time for such illustrious folks. But I would start by asking everyone if we can have introductions. Tony, would you like to start?
Hi, Tony Horrell. I'm the CEO and chairman of a company called Cranium Ventures. We're a venture builder designing and deploying subsidiary companies in the areas of payments and crypto. My background is 35 years in the payments industry. The first 15 years for companies like Visa, ACI, First Data. The next 10 years building companies like Oasis Technology, which grew to be the second largest provider of payment software in the world, where we provided technology to 500 banks and 40 countries before we sold that to FIS. And the last 10 years designing and building solutions to address the very problems that you've just described.
Thank you very much. Anish?
Hi, this is Anish. I'm the CEO of WealthTech Singapore. We are a fintech based out of Singapore, blockchain-based payments infrastructure company. We've been active in this space since 2018, much before what has been happening in the last 1 or 2 years, and currently operating aggressively in Southeast Asia and South Asia. Very recently, we've started added Middle East and Africa to our portfolio as well. So we are clearly expanding. About myself, I'm a little shy of 20 years of experience in the payment space. In my previous roles, I worked for the likes of MasterCard, pretty much build the prepaid business for them by stealing the business from Visa and the acquisition of TravelX. Prior to that, I've held several senior positions with American Express across Asia and Europe. Excited to be here. It's an exciting bunch. Look forward to the discussion.
Thank you very much. Vineet?
Hi, thanks for having me. My name is Ronit. I work at Citi. I'm head of banks and fintech research. So I'm here as an analyst rather than to represent Citigroup. And I'm very happy to talk about what's happening in the industry with some amazing founders who are actually at the forefront of building new products and new business models. So thanks for having me.
It's wonderful. And Noah?
Hi, I'm Noah Silverman. I come from a bit of a diverse background, PhD in statistics from UCLA. And I've spent my career developing mathematical models around risk and money and finance. Currently, I'm the founder of Light.cx, which is a cryptocurrency derivatives platform, and also the founder of Innovest Energy Fund, which is a hedge fund focused on cryptocurrency-based investments and trading.
Thank you very much. And as I did promise everyone, we have quite a depth of knowledge here. And what I'm loving also is that we've all been, and obviously I'm not in your space specifically, but in this area, in financial services, in payments for quite a long time. So it's not all about someone just coming out, yesterday, although it is lovely to see the startups and stepping into the space. So you bring such depth of knowledge. Now, our topic is talking about blockchain and cryptocurrency, obviously, in payments. And, blockchain, as we all know, has been discussed and bandied about will it be real, will it be in our mainstream since the 2014 time as well. So I suppose my first question, and this is a question for everyone, is blockchain mature enough now for it to be in enabling large volume, high speed payments? Or are we still having the conversations that say it's not quite ready to be in a mainstream environment? Tony, do you want to start?
Well, we value blockchain and we use blockchain in certain aspects of what we do. However, when it comes to the very high speed, super high fast, very scalable solutions, we still prefer to work with other technologies and effectively integrate into blockchain. We did quite a lot of research in that area, and we found that we would have to modify blockchain quite significantly to make it do what other platforms, what other solutions are able to do natively.
Interesting. Anish, do you want to, you're in the infrastructure side?
Well, see, payments have come a long way, right? I mean, payments just didn't emerge 5 years ago. If you look at Ethereum or the current blockchain processes, blockchain is still very new. High volume transactions at the current TPS or the transaction speeds that we are looking at. That's been a work of, or decades of work of fintechs and banks and several other legacy systems being fine-tuned to make those transactions happen. Blockchain is new. What we are doing is looking at a much more hybrid model, something which Tony said, and I'd refer to that, is keep blockchain in the center, but build those bridges which still talk with the traditional legacy technology, because that actually works in a lot of instances. But we're also looking at sandboxing different programs where we use blockchain end to end, where probably traditional legacy systems have not been able to make that much of a difference. So I think there is something, there is definitely a lot to be done, but we're not there yet.
And I find this very interesting because we make the assumption that if we're talking about cryptocurrencies, that, you know, it must be that it's a fait accompli and it's here, and the way that it is just going to, we'll talk about this later, plug in to something. But actually, if I listen, there's positives, there's bits of it that work in a certain way, and there are other bits of it that are not yet built in the infrastructure, which is what we often don't talk about. We talk about the uses of it in other ways, and we talk about the hype of it. It's still nascent, and we're still not entirely there. So we'll come back to that. You know, you obviously are dipping into capital markets as well, and some of what you're doing on the energy side as well. But what's your thought on this? Is blockchain mature enough for us to be jettisoning everything else?
Well, I think we first need to start with what is blockchain. You know, there is no the blockchain. It's an entire category of technology, and really a blockchain is just a decentralized database, which has pros and cons. So you need to step back and ask yourself, why do we even need that, and why does it matter? And as we've just heard from both Tony and Anish, in the real world, when the rubber hits the road, a pure blockchain solution is often not the best solution. The real question would be, why would you even want to use a blockchain for a payment network? And I'm not convinced that you need one.
Well, and again, this is, I think this discussion and debate that is live, we'll see it when we talk about CBDCs and how the DLT is involved in that, and how much of it is involved in that, and whether or not we really need the full solution behind it, or people's misconception is that it's a full solution behind it. Ronit, how are you seeing it? I know you're here as you, as opposed to your one of your day job. But what's your thoughts on this as well, in terms of blockchain being ready and ripe to take on the volume?
Sure. I'd probably echo what the other speakers have said, Tony, Anish, and Noah. Blockchain today, when it comes to high volume payments in the banking industry, whether in my company or others, is really not yet fit for purpose. But having said that, every major institution has many, many blockchain projects. Once you get past the, Visa processes this much per second, or JP Morgan or Citi this much per second, because trillions move every day, literally every day in a big global bank. You're moving several $1 trillion, or in Visa, MasterCard, the millions of transactions you're doing. That is really hard to replicate on today's blockchain technology. Now, that said, there are kind of interesting use cases. And the audience will be familiar with this. Sort of one very interesting use case is, what can we do with tokenization? What can we do with sort of, particularly in the field of property rights? What can we do in areas that don't require high velocity, a zillion transactions per second type business, right? So there's lots of projects going on. A lot of it, admittedly, is in the proof of concept or press release stage, but there is a lot of work being done. And I think for me, what's been really interesting, particularly the investment side, has been the growth and now increasing acceptance, slowly by regulators and big banks, but much faster by society as a whole in the whole cryptocurrency space. And what we're seeing, that is potentially a Trojan horse almost in terms of introducing a blockchain-based technology that actually has use cases, mainly financial at the moment, transferring financial value, whether in the Bitcoin network or in the Ethereum network. But you're beginning to see some real life use cases, whether you're talking about what's happening in ETH or in NFTs, et cetera. But in terms of traditional payments, it's really hard to do traditional payments today on a blockchain.
Yeah, and thank you. It's interesting. You take us into the use cases because we've spoken before about the fact that we're all talking about it, and we might be potentially in a bit of our own bubble. And Noah, you alluded to it, whether or not we need all these, the new technologies and new ways of moving and creating money. So what is, in your opinion, we'll come back to use cases, but does the consumer actually need this? Or are we trying to shoehorn something into, the solution into the problem that doesn't really exist for everyone? Noah?
Well, I'd actually like to go back for a moment to what Ronit mentioned, which is that a lot of banks are starting to experiment with it. And the question for me is always, how much of that is simply a PR move because they're new and exciting and trendy, but I'm not sure the banks really need them. Banking has had reliable databases and communication systems for a long time, and they work fine. So, and if I pull out my cell phone now in Hong Kong, I probably have 10 different payment apps. I don't really care if they're on a blockchain or not on the back end, and I'm not sure the consumer cares. So other than being cool and fun, again, I'll ask why.
I think you're right, but most of us would not, as long as we can do the thing we want to do, we're not really bothered about what's behind that. Tony, following on from what Ronit and Noah have been saying, and I know that there are maybe particularly good social aims and use cases. Is there, if we're not thinking about me just going out and buying my latte, is there something much more meaningful that we can bring to the fore?
Well, beyond the latte, yeah, I think we've spent 10 years now really thinking about how do we shift the view of payments. Payment is an exchange of value, and at the end of the day, there are many mouths at that trough in the exchange of value from different types of payment service providers, card associations, the banks themselves, et cetera, et cetera. So there are many people between myself and the person that I'm paying. And that costs money at the end of the day. And what we've been looking at is, can we redirect that value into, for example, environmental sustainability, ethics, social equanimity, and so on. So the idea of actually taking the cost that exists within payments today and shifting that value into something that does some good is really what we're focused on our side of the equation. So the question isn't really, can we do traditional payments in the way that payments work using a blockchain? I don't really think that's the question. The question is, we've got 98% of the payments running through technologies that were designed and built in actually 1976, if it's base 24 on Tandem. Those technologies are end of life. Blockchain is trying to find its role, crypto is trying to find its role in payments at a larger level within society. So maybe we're just looking at the question wrong. Maybe we need to think about this differently and say, well, what can we do within payments that actually makes the world a better place?
And good point that we sort of stay in our lanes, as it were, and we think about the traditional rails that we have, but maybe as with many new things, we have to just throw out our old thoughts and we have to look again at and start fresh. Anish, you're looking in the back in the infrastructure side of it, and I want to come back to everyone and talk about how we blend the fiat and the crypto together. But following on from what Tony has been talking about, how are you seeing that?
See, again, we categorize payments into two buckets, right? There are payments which are running on the traditional ecosystem or as traditional systems. And then there are payments which are cash-based payments. To Tony's point, right? I mean, Traditional systems have failed to address a certain part of the society, and that's because they are clunky or there are several mediators involved, and it makes the end payment very expensive. The way we are looking at is, rather than going and shooting ourselves in the toe and being a part of the crowd, let's look outside. What's already out there as cash payments? And that's where the role of CBDC or stable coins, etc., come into play. And that's where we are trying to do some of the programs, run some of the programs to understand that how can we actually bring that society, which currently does not have access for a variety of reasons, underbanked, underserved, or whatever it is, into the financial ecosystem using blockchain, and then use those examples to then change or affect the traditional payment ecosystem as well. So that's the philosophy, or that's the step that we take.
How do we then blend, if we bring them into the traditional ecosystem, how do we then blend the two worlds? Because if we go back also, then let's go back to the bank. I obviously can't plug in something that into the old COBOL stroke IBM 400. Love them as I do. So to start again, what's some of the journey bringing them together so that they can work, or is that not going to happen? Right, because if you bring something in and you're bringing in an unbanked or an underbanked population, great, into the mainstream, which is still running on the other legacy system, how do they come together from a technological point of view?
I guess that's where the hybrid solutions come into play, right? Because we are not replacing, it's not a switch on and switch off. What we are trying to do with blockchain is, of course, use blockchain as a central entity, but then build those bridges which still mimic some way with the traditional system ecosystems or the traditional technology. Once you do that, then it will be much more easier for those traditional ecosystems to adopt into blockchain as well. So that's something which we are looking at on how do we do that. It's pretty similar to what we're doing or what the world is happening or what is happening with electric cars right now. We don't know how these two are going to marry, right? But we know we are moving towards that. But what is going to be the end result, we don't know yet. So it is still a journey. We are on that road, and it's going to take us a while to understand that how these two are going to marry eventually.
Okay. Aneet, we're talking about use cases, and obviously we have this the unbanked and the underbanked, and there's a social impact. Are there other use cases? Trade finance, for example, is always the thing that people, tout when we're talking about blockchain. And I was speaking to someone the other day who said, "Oh, I wish that people wouldn't do that. We just need a different kind of ledger for that." What do you think? Is there more, or are we just not seeing past the obvious?
Yeah, I think when you discuss use cases, one of the questions that come up, particularly from people who are somewhat skeptical, let's call it cautious. People who are cautious about blockchain or crypto will say, no consumer or end user is really asking for it. Even the unbanked or the underbanked, they just want a cheaper, safer way of being plugged into the economy. And if you look at sort of financial inclusion, you've had huge improvements in financial inclusion over the last decade, particularly in India and China. All of that took place without blockchain. It took place because in India you had a robust centralized digital identity. In China, partly fueled by two very large private sector companies. None of that, I mean, billions of people literally, without exaggerating, maybe I'm exaggerating now, but if you sort of look at the World Bank data, you've had literally 1 billion or so people come into the financial system. Now, looking ahead, at the same time as people saying, look, no one's asking for blockchain, no one was asking for the iPhone in 2005, particularly in the corporate world. I mean, my BlackBerry literally had to be pulled out of my hand, like ripped out of my hand. And even then I wanted another one back. And today we all, at least me, I mean, I live on this device, right? Before this device came along, I had no idea I needed it. Now, What would the use cases be? I think from a kind of top-down perspective or an official perspective or a state perspective, I see more initial use cases than from a consumer perspective. Because if you can have something that's programmable, think of all the features you can embed into smart money. So basically you can embed smart contracts into smart money. And that creates all kinds of potential social goods. If we have, God forbid we don't soon, but if you have another COVID or a localized natural disaster and you want to get relief funds out, Programmable money allows us to tailor it much more closely rather than just getting the stimulus check and then going and speculating on your app of choice. So there are lots of use cases, I think, from something that's programmable. It's just sometimes not obvious to us before we get it, is the way I think about it.
No, and I take your points. And actually, there have been parts of the world where they had to go get physical cash for the stimulus package during this whole pandemic. And it made it worse. Actually, people got COVID while they were in the queue. And we need to find some other solutions. Because in countries like in Latin America, where 70% of the population might be unbanked, how do we actually get this out? Whereas in India, the Aadhaar and other ID payment functions, it's a bit easier.
Also, apologies to interrupt, Helen. Also, once you get outside, like I know some of you are based in Hong Kong and the system works in Hong Kong. I think, Helen, you're in London. The system works in the UK. Take the US. The US is this wonderful patchwork of some of the most advanced technology and some of the most incredible companies and a pretty, 19th century, but 20th century payment system, whether it's B2B. I still remember this sort of story of a FinTech founder friend of mine who had a contract from a very big bank to do something very, very sophisticated for this very big bank. He got paid his first, he got paid with a check.
I know who you're talking about.
He was doing something really at the cutting edge of cyber. The check arrived. He didn't know what to do with it. He was like, and he was based, the company was based between London and New York. The check arrived in one city. They had to physically take it to the other city, deposit it in the bank. The particularly B2B, but the payment system in general is still, in many countries, starting with the US, has a lot of work to do. Is it blockchain? Maybe in part, but just in general, we're still not at a real-time 24/7, 365 payment system.
No, we're just, I think, starting to see that in the US, just starting to see that in certain parts of the US, but you're right, it's been behind for a long time. No, your hand up, and actually I wanted to continue this conversation in terms of, we talk about, and everyone's talking about blockchain because everyone's talking about Bitcoin. Everyone's been talking about the speculative nature of it. I make money, lose money, but it almost seems like it's otherworldly. It's somewhere over there. It's not actually about the mainstream. It's just something that I invest in. It's not really something I could use. You know what I mean? So sorry, I interrupted your hand up, but that's that. I wanted to ask you about that.
Well, I think we're confusing a few issues here. I absolutely agree with the other panelists that a lot of the financial and banking systems are woefully out of date, using ancient technology. There are layers and layers of middlemen and intermediaries and fees on other fees and complex banking regulations and rules and distribution problems with currency and assets, and all those things are there. That has nothing to do with a blockchain. A blockchain is a ledger and a database, and it's a nice one with some nice decentralized features. I would argue you only need a blockchain when you have multiple parties writing data who don't trust each other. The minute you have a bank you can trust or a government you can trust, you don't necessarily need a blockchain. For example, if you have trouble distributing COVID funds, sure, a mobile app is great. Digital payment transfer is great. Why need a blockchain? Oracle makes lovely databases. IBM makes lovely databases. There are tons of open source databases and redundant systems you can use. Now, I work with cryptocurrency every day. I've written core software for it. Again, I'm involved in a fund that invests in it. But I think it's things like the blockchain are often overused as a magic cure when there are plenty of existing solutions to the problems we have.
Carrying on with that note, also in terms of CBDCs, and now again, we're all in the news, we're hearing about CBDCs. We saw them starting obviously in China. In the UK, we have the Bitcoin being discussed. It was all instigated, I'm sure, in terms of the public's eye by the Facebook attempted entree as well. And here, is it on a CBDC that we need to be using some form of the blockchain at some part of that journey? Or is that a different DLT?
I don't think you need a blockchain for CBDC. Blockchain was originally designed for Bitcoin so that people who didn't know or trust each other could transact payments. You have the government. And whether you trust the government or not is an entirely separate conversation, but you have a centralized authority of the value of that coin. For CBDCs, there are a few benefits for governments. I like to start with the least obvious one, which is the cost of physical cash printing and transferring and handling is rather expensive. The governments get rid of that. Secondly, they now have full surveillance on all payments, which makes things like taxation and dealing with criminals much easier for the government. You have currency controls, which are much easier for the government. And if you have a government that's less than, let's say, ethical, they can start to play some games. For example, if I'm the president and I decide I want to stimulate the economy post-COVID, okay, everyone's saving is going to reduce by 10% a month in our new CBDC. Go spend it before we reduce it. Boom, you've stimulated the economy. So governments love CBDCs for all sorts of reasons for their benefit and convenience and surveillance and control and cost savings. I don't think it gives a magic solution for a lot of the public.
Anybody else want to weigh in on that?
So I think CBDC is an interesting phenomenon, right? And again, going back to my example, we are in the times of electric cars, but paper money. That does not make sense, right? To start with. But and Noah is absolutely right. CBDC gives a lot of control back to the central banks and to the government to start gamifying payments. And how do they get more involvement of the citizens into payments? And how do they? Because currently it's like playing in the dark, right? Okay, this would work, so let's roll it out. And then you, after 2 years, you get to know that it didn't work. With CBDC, the feedback is a lot more instant. Is a certain welfare policy working? Is it not? Where is the money going? Where is it being spent? So all those controls then come back to the government. And we have seen in times of COVID, governments have been running around like headless chickens. So if we did have CBDC then, imagine how better things could have been in terms of welfare distribution, SME loan distribution, and all of the things. So CBDC is the way to go. It's just how well entrenched it will be in blockchain is something, is because CBDC is still a white paper. We don't know yet. We will figure that out in time to come.
I think if I can pick up on what Noah said before, by definition of CBDC, it's got C in the acronym, right? It's centralized. It's a central bank digital currency. It's a bit like if you have a JPM coin, or it's a central bank issued. So it's, in a way, if you think about the spectrum of tokenized money, at one end you have decentralized, so what we consider crypto and day-to-day, Bitcoin, Ether, etc. At the other end, you have CBDCs, and the impulse. And Helen, you talked about it in terms of we don't know what Libra or DM will achieve in the end. It might become something very, very significant, but it's already achieved something, particularly in the West, which is it's launched 1,000 CBDC projects in the West. In China, it's obviously well before DM. I mean, this goes back to 2014, 2015, that the PBOC have been working on it. And in a way, the response of the Chinese authorities is that, if I generalize, we're living in this kind of digital version of the Gilded Age that America went through when you had monopolies and huge centralization of private power. The state wants a piece of that. And why shouldn't they? I mean, you can argue if it's good, if the state represents us or not, but the state wants a piece of that. Why should one private or two private companies control that?
Interesting and correct, right? We see it from, and you're right, that the central bank side of it is the thing that, I suppose, and again, I go back to the man or the woman, the person on the street. How do they make sense of all of this? I'm just imagining, if you're just picking up the newspaper and you've been living through what we lived through for the last year, and you're just trying to get by and get on and keep working or doing whatever you're doing, and you're reading all these things about central bank digital currencies, and you're watching the price of Bitcoin go up and go down. How do we as consumers, I mean, let's go back to MasterCard and Visa obviously are investing in companies that are in this space as well. And I'm thinking about the small merchant and how that impacts the small merchant as well as MasterCard and Visa, for example. And then myself as an individual in society, how do I start to make sense of what I'm seeing? And is there an impact to the business model, for example, of a MasterCard or a Visa by getting involved in the space? Would like to jump in.
I think there's a few aspects there. I think if you're a criminal or a tax cheat, it changes your perspective dramatically. I think if you're just an average person living your life, going to work, if you're paying for your latte, which app you use on your phone or which card you pull out of your wallet probably doesn't matter. Now, where there's some interesting opportunities, to Tony's project, I think being able to do some social good and connect that into payment networks is very interesting. And I think the other area where we'll see some change is credit. Traditionally, I have to have a credit score from some central bureau. I have to go through a lengthy application process. It's got to get approved. I have some limit on my card that's tracked. I can imagine with digital payments where everything is instantaneous, that how and when credit is given to me might be a much more dynamic thing. And that might create some more interesting opportunities for consumers.
I was just thinking, I mean, I don't remember the last time I used cash to buy anything anyway. So I think whether it's a fiat currency or a digital currency doesn't really make any difference because we're using digital payment methods mostly. So unless you're in a cash-based society, you really won't feel the difference. I don't think it will have a deep impact to the individual, particularly. Sure, to the government, definitely the capabilities that brings, for good and for bad. So I spoke to somebody recently actually in the central bank in Myanmar, and they said that at this point, there is not enough cash in circulation in the society. And they're now moving back to barter.
Wow.
So, because they can't get the paper and the ink to print. So never mind what's happening at a political level in the country, the people are struggling because they don't have access to paper money. So I think from that point of view, there's a very, very valid opportunity there, or in that type of scenario. And I think the digital currencies ultimately will provide us the ability to move beyond those types of problems.
Briefly to Tony's point, last time I was in Shenzhen, which must have been 2019 before the pandemic, I had some trouble with my WeChat wallet and I pulled out cash to pay a taxi, and he got really upset with me. He was yelling at me in Mandarin because nobody wants cash anymore.
It's interesting because of course we're very privileged to be sitting in places where this might not be an issue clearly, but then when you put it into perspective like that, yes, if you can't, we know in the UK there's more money being printed, but there's less money in circulation. Presumably there are a lot of loaded mattresses and other things, shoe boxes and shoes that are full of money just in case. And actually in times of uncertainty, when we are looking at the just in case, we seem to revert to the thing that feels most comfortable and the thing that we know, because that's what we know. Now we're looking at this new world where we don't yet know. And maybe this is a better solution than shoving it in the toes of our shoes and putting it under our mattresses and finding other ways to do it. But we don't know that yet because we're just seeing snippets of it and not something in a more connected way. I'm also struck, and as you're all talking, I'm thinking, do traditional incumbent organizations have a little bit of a responsibility to educate the consumer as well in this space as to how this is all maybe potentially playing out? Who has the responsibility to educate the users as to what's happening? Anybody? Nobody? Because I feel like the confusion is never a good thing.
Well, I think right now everybody is just trying to save their own self, right? Rather than educating anyone. Even when you spoke about MasterCard and Visa, they are playing game with acceptance of with acceptance of digital assets because they want to stay relevant in the next 5 years. We don't know how many MasterCard or Visa cards do we have in a wallet right now, but we do know we use Apple Pay or Google Pay. So the relevance of MasterCard and Visa has gone down. And I think this is absolutely right. This is a turning point where they can establish that relevance again. And I think they're trying to do so by getting into the acquiring of digital assets and potentially CBDC in the future and establishing themselves as go-to brands which understand that, yes, you can make payments with these assets and these payments are completely valid. So I think they're trying to get there, but not there yet. Again, it's a journey. And we will see what happens in the next couple of months.
I disagree with Anish.
Yeah, I was going to say, listen, and actually I applaud MasterCard and Visa for pivoting and seeing that this intermediation was on the horizon and moving quickly. Yes.
So I think Anish is speaking from the perspective that many of us would when we're engaged in the frontier of what's happening in payments and finance. So we're looking at, these are the incumbents. Here's something really interesting, particularly if we're working on, and this is growing at an exponential rate. I think what we forget is that for Joe Schmo on the street, actually Visa MasterCard usage carries on growing. And I'm not picking on those two networks. I'm just saying, I would think of it more holistically as all digital form factors have been growing. I mean, India is a great case study, or even China. You'd think that, credit cards would not be growing given the explosion in UPI usage, et cetera. And yet credit card volumes and values continue to grow double digits in India. Sweden, where Tony, I think, is sitting, is probably the only market I know, or country I know, where credit card volumes have actually begun to plateau. And I think Kenya might be another one. But generally, the resilience of these network companies, it's very easy for us to underestimate. I agree with Anish in terms of he's thinking that actually the most interesting things are happening outside these big incumbents, but they have the firepower to basically absorb in quite a bit of this. So I guess the way I think about it is just that all digital form factors are growing, and some will grow triple digits and some will grow double digits.
We are very much in transition. And actually, Tony, I think buy now, pay later is the thing that's taking over Sweden, isn't it? She says. We have about 8 minutes and we have some questions. Let me just get into the chat as well. So the first question is, how do you see CBDCs in banking payments? We did touch on some of that, but maybe this is coming from a correspondent banker. Would someone like to tackle that? CBDCs in banking payments.
You can put it into time, as in where is it going to happen? The only material or large country, without any disrespect, the Bahamas, is China. In most countries, so the BIS data is what, 86% of central banks are working on this. Nearly all of them are proof of concept stage. In most countries, it's 3 to 5 years out before you start things having any kind of material impact. And when it does, it's going to be, I assume, capped and regulated. As in, you're going to have only a small amount of, you can't be big corporate treasury and say, I'm moving all my cash into CBDCs. Banking system's going to blow up. I know everyone wants innovation, but very few central banks want instability.
And from a payments point of view, it doesn't make any difference at all. It's just another currency code.
Okay. And I think the other thing that we discovered during this last year is digital identity, and the question of identity around what is meant to be an anonymous or anonymized set of rules come into a bit of conflict as well. So the next question is data privacy concerns with digital currency payments as it happens. So that's Noah, do you want to pick up on that? Oops, we're on mute. You're still on mute. That was 2020, but it's also 2021. You're on mute, right?
There we are. Okay, so the short answer is you have no privacy when it comes to digital payments. Zero, none. There are endless stories of criminals being caught from things on the blockchain. That's the whole point of an immutable ledger. That said, there are a few exceptions of some privacy coins that are sort of exotic and specialized that if you're a real computer nerd, you can get into. But in general, you have no privacy.
Okay.
Can I add to that, Elaine? And I think, especially after COVID, we have given our rights to privacy already. Look at Trace Together apps. We are being tracked every minute. So I think this is a much bigger subject for a completely different panel to discuss about privacy. So payments, yes, it's a part of it, but we are tracked even right now. So this privacy is just, the definition of privacy has kind of changed post-COVID.
Yeah, I would agree with that. I went in and literally bought an espresso and was standing there with my app and doing my Zappy QR code so people knew where I was. It was a follow-on to the first one, and we might have dealt with some of this as CBDCs come to market. What's the role of commercial banks? Will there be a day when retail customers will have an account directly with the central bank? No, everyone said no. That's the answer to that question. We're not all going to rock up to our banks, right? There is still a need. And I think, Noah, going back, that was part of my question to you in terms of what are the databases? What is the blockchain element of it? What is the rest of the correspondent banking network that's in there? Having personally started in correspondent banking 150 years ago, it's still, I can see that there are people that still know that part of that network will take stay and take place. Well, we've got a few minutes left, and actually we've kind of come on a journey, and I think it's clear from what all of you have said that blockchain, as it stands right now, is not going to be, we're not in a position where it's taking over everything, nor does it need to. There are other ways to do things. There's a way that we need to find to get an infrastructure mindset that is not about then, it's about the now. And there are some technological challenges. There are some great use cases that can come out of it, be it for people who are excluded from the banking system at the moment, or for other ways that are a bit more day-to-day use cases, and not so much. We obviously focus on financial inclusion because it matters to all of us, but there's more to it than that. So if we're standing here right now and we came back in, let's say, 3 years' time, I'm going to cut the time frame instead of 5 years. Would our conversation be the same, or would we then be saying, hey, this is what's changed in terms of blockchain and crypto and payments 3 years out from now? Who wants to start first?
I'll take a stab at going first here.
Thank you, Noah.
I think to what both Tony and Anish are working on, you're going to see a much more efficient and streamlined payment network. The idea, I remember years ago, I worked for some retail business that needed to set up credit card processing, and there were an acquiring bank and a processing bank and some other aggregator. I was shocked at how many levels of fees and layers were in between. Where then you look at something like WeChat Pay, and it's instantaneous. I can send you money in a fraction of a second. So I think we're going to see the traditional payment network shift to something that's faster and more efficient. Whether that's blockchain or not, who knows and who cares?
Yeah, I was just going to say, we're doing the old QR code now, pay you, smart invoicing, smart payments already with smaller fees in that journey. So it's interesting to see if we can advance that. Who would like to step in next?
So, sorry, go ahead.
Go ahead, Tony.
Okay, I was just going to say, I think that there's a convergence that we're seeing between payment methods and currencies. So I think ultimately the emergence of smart money, and particularly the emergence of asset-backed smart money, which is socially owned and socially governed. I think that's the direction that this industry will probably ultimately shift towards. But of course, there will be many different variants as to what that actually means as we move forward. Anish?
Well, I think from a consumer experience standpoint, the consumer experience is already very good, and as we have discussed during this panel as well. But we do expect in the next 3 years, when we reassemble, TT will not take 3 days. It will probably settle in 1 hour, and that will be the efficiency we would have added in the next 3 years. So that's the big difference. Take it or leave it, but that's the big difference that we're looking at in the next 3 years.
Super.
I think we see an acceleration of all the existing trends, but the biggest one is that none of us wake up in the morning saying we need to do payments or banking. We want to get something done. I mean, like when I take an Uber in Dubai, where I'm based, to Kareem, one of the best advantages is I don't have to mess around with money. I just open my app, click on where I'm going, it's done. Payment is invisible. In most parts of our lives, we just don't want to be messing around with payments, credit. It's always to do something else. So embedding of finance into our day-to-day lives, that's just going to get more and more frictionless. Just make it hopefully easier for all of us to just enjoy life.
Which is a wonderful way to end. Thank you to everyone for the panel this morning. I hope everyone has enjoyed it as much as I have and you've learned, and look for the efficiencies and for the seamless engagement, and also not worry about what the tech is behind it, because Anish and Tony have got a handle on that. Thank you, everyone.
Cheers, guys.
Thanks, everyone.
Thank you.